Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Now I'll be giving the Asian Session Live Market Analysis and the Forecast webinar, making the review of the forecast what I had given it on Monday to find out whether the market has moved in line with that of the expectations of the forecast. And also I will do the market reading in 4 majors and 2 commodity pairs by using the live market quote page as a single tool to identify what sort of moves the players intend to make during this day. And today we are on 21st of October, the last day of the week. So the players are expected to trap the traders either way. Now on the downside, by creating the feel that Euro and GBP could make a free fall, so that the traders, those who are holding long positions without hedging or without a stop, they will be frightened to liquidate the long positions. Then later on, towards close of the Japanese session, they are expected to firm up and then continue the gain. So swing and slide during that of the Japanese session, and then swing and rise during that of the European session, and continue to firm up during that of the US session. These are all the expected moves. So they made the good raise on Monday, and then subsequently they made the slide, and they made the drop also after that of the midweek slide. And then yesterday also they made the slide, and they are expected to make the firm up, but they made only a pre-firm up and then continue the slide. And now they again continuing the slide in order to induce the traders to liquidate the long positions. And they are expected to gain the levels from that of the late Japanese session, since they had made the downward move and hitting this lower level stops and holding around that of the initial low. They are likely to gain the levels towards close and then start gaining the levels from European and US session onwards. Next week, that will be the 4th week of the month. Afterwards, there is only 1 day left out, that is 31st. And at that time, you will find the month of October gets over and the new month of November starts. And whenever you come across a week wherein the month gets over and the new month starts, the players bring in more volatile moves. Within 5 days of the trading week, they will try to make as much of volatile moves as possible. Normally, when the month gets over in a week and the new month starts in the next week, then they have about 10 days to manipulate the market. But since they have only 5 days to manipulate and hit all the stops for the derivative market, then they make very volatile move during that time. So coming week, they are expected to make the swing and rise move, and probably they could discount all the negative news and then try to gain the levels during that particular time. Now there is a question, AUD volume is very thin, how do you trade? See, as far as AUD is concerned, then they are able to easily gain about 50 to 70 pips and then slide slowly, take about 2 sessions and slide, and then quickly gain the level. That sort of moves they are doing it. And when you see that Euro and GBP are showing the negative net change, AUD is showing positive net change. So they intend to gain the levels and later on hold and then continue the gaining moves in the case of Euro and GBP during the day. And since now Australia is very active during this particular time frame, that is why you come across AUD is making some good moves. But in spite of the thin volume, it is a major. So obviously the players handle it in order to handle the crosses as well, like Euro Aussie, then GBP Aussie, etc. So you will come across After forming the initial low, they set it, so they are likely to gain the level from here. And I'll give the trade recommendation. At that time, you can just watch and ask any other question if you have. So they are expected to make the swing and slide now during that of the Japanese session by 7 GMT. Then afterwards, they are expected to gain the levels in the case of Euro and GBP. Now, with regard to the levels they are shown so far, so the estimated low was 1.09, and they came up to 1.0897, and then followed by 96, and then they have gone above the 1.09 now. And the high they set so far, yesterday they set the high 1.1039, and in a very narrow range of about 140 pips, they are trying to make the moves. It is a really subdued move. In a week, they can make about 350 pips move, whereas they are making only 150 pips swing between the high and the low. It indicates that predominant of the traders and the investors are waiting for the outcome of the US elections, and then later on want to enter into the market. So in the absence of good volume, the players are not able to make any big move. And now in the case of GBP, I was expecting a good downward extended stop and before making a rise. That is what the forecast was indicating. But they just came down only up to 1.2152 and then started gaining the levels. Now they are holding around 1.22. Slowly today they are expected to gain the levels in the case of Australian dollar to start with, and later on gain the levels in the case of GBP, and finally in the case of Euro. In order to handle the crosses, they make such moves in a sequential way. And you know that commodity pairs lead the rally and lag behind. So they will initially gain the levels and give the momentum for the market, and subsequently stop gaining more. So if you are taking a buy position in the case of Australian dollar, you try to see that you are using a trailing stop to maximize the profit. Then in the case of yen, 102.50 was the expected low, and they just came down to 103.21, another 75 pips. They were not coming down, and they went up to 104.38 so far, and they are holding around. So they are making again subdued moves in the case of USD and Australian CHF. 98.67 was the expected. The low they are set. 98.25 was the expected mathematically calculated low, and they are about to go above that of parity, but they have come up to that of 0.995055 level. So we need to see how far they are going to do the moves subsequently. Then in the case of Canadian dollar, 1.31 was the expected low, and they came down to 1.3055 and gone up to 1.3248 and 51 level, and they have got still potency to take it up before making further downward move during the next week. Then in the case of Australian dollar, 75.81 they came down to, and then went up to 77.34. Again, a narrow range moves were seen. So we could come across some improved spread and the gap between the high and the low during the next week, because the derivative market volume will also come into play. So as a result, the players are expected to make some big gains and the drop alternatively during next week and the following week. Now, with regard to the market reading, I noted down the initial lows and the highs around 3:30 GMT. Formed the low 1.0897, and then they just cut it by 1 pip and come above, indicating it as a brief downward dip in order to induce the long holders to liquidate the long position before making a rise. Towards close of the European Japanese session, they are expected to go to 1.0930 and above, and start making small swings during start of the European session, and then start rising it. In the case of GBP, 1.2232 is the initial low, they came down to 1.2229 and then started gaining above that of 1.2235, indicating that they will breach the high and go above 1.2260. Then in the case of yen, 103.92 is the low, 104.19 was the high. They went up to 104.20 and started coming down. So after a brief upward stopping, they intend to make the downward move, and that will give the trigger for euro and GBP to go up. CHF 99.24 is the low and 99.52 was the high. They went up to 99.55 and then come down, indicating that they will make either way moves here. They may not go to parity. Then Canadian dollar 1.3114 is the low, 1.3248 was the initial high. They went up to 1.3251 and come below that of 48, indicating they have made a brief upward stop and to come down. And probably they will close around that of the middle level between the low and the high for the day. Then in the case of Australian dollar, 76.19 is the low, 76.37 is the high, and they are not breached the low or the high. So in all currencies, you come across only subdued moves have happened, so which indicates that lack of volume, and the players are also making careful moves in the market. Now the trade recommendations. 1.0897, I kept the buy limit order and that got filled. And 1.0940, we can try to exit using a trailing stop once the position start making profit of 20-25 pips. Then we can maximize the profit when they gain the level. Keep the hedge order to limit the risk. Then 1.332232 is the buy limit order, just one pip short now. So if they just dip and fill it, fine, you take it and keep 1.2190 as the hedge order to limit the risk. And they are likely to go to the top 1.23 area. Then in the case of Australian dollar, they are expected to make a dip, but they are not made the dip, they are just gaining the level. So instead of 75.95, you can take buy position around 76.27, 5 pips, 4-5 pips below that of the current market level. And then once they gain the level during the early part of the European session, you book profit. Later on, they will simply hold it. In the case of Australian dollar, you know the commodity pairs lead the rally and lag behind. So when they are lagging behind, you will be frustrated holding the position. Instead, when they make a quick rise, quickly book profit using a trailing stop. And later on, you can focus on euro and GBP. Now, these are all the market timings, the early and the late sessions. The late session starts by 5:30 GMT up to 7 GMT. And next week will be the last week wherein you will follow this particular time frame. The players follow this time frame. Afterwards, you know, the daylight saving system will be off in Europe from 30th. As a result, from 31st trading day Monday, the following Monday, the Japanese session will get over by 7:30 GMT. 7:30 to 8 will be the gap time. Then 8 to 13 will be the European session till the first week of November. Then later on, you will find from 2nd November onwards, the daylight saving system will be off in US. Then US will start by 14:30 GMT and gets over by 21:30 GMT. So from 6th of November, we are going to do that. So from 7th onwards, the following week, we'll be able to find such timings. So keep in mind that if you follow the timings, it will be easy for you to decide on the trades. Early on the late sessions, focus on the majors. Rest of the time, you can just take rest or attend to other work. That way, you will be able to watch most of the early or the late sessions wherever you are placed in the world. So I'll be coming on Monday and give the webinar for the next week. explaining the expected market moves for next week. If you got any doubt, you can ask me. I'll be willing to answer those questions. Market is really making subdued moves because of the US election uncertainty. Even though people say that there is clear-cut mandate, but the players need to get it officially confirmed, and also they need to do a lot of lobbying before committing more positions into the market, which I will not be able to discuss in an open forum. If there is any question, kindly ask me. Okay, what is your view on gold and silver? Now, if you carefully watch, that slowly they are gaining the levels in the case of gold, and to a certain extent in the case of silver, they made the dip and they wanted to gain the levels again. So they will be leading the rally. The commodities will always lead the rally. So gold and silver will also gain the level before Euro and GBP start making visible gains. And you would have noticed that previous week and following week, they have been doing lower level consolidation with frequent downward stop and indicating that they are accumulating the buy positions. Afterwards, they slowly gain the levels up to about 1,260, 65, etc. In the case of gold, mainly to induce the long holders to liquidate before making further rise. So at the end, you will come across that only the players will hold predominant of the buy positions. The traders would have either liquidated the long positions or they would have taken sell positions, thinking that the market might be subdued before the elections. But in gold and silver, the volume is relatively less. They can easily accumulate the positions, and the commodity market is a different type of market where the punishment is very high for the traders. So they have to pump in the margin if their position becomes unfavorable, otherwise they have to forcibly close the position. And the lot size also is different. Yes, as far as oil is concerned, it has already bottomed out and it is in the upward trend. Any dip is a great buy opportunity in the case of oil. Slowly you will come across after that of the US election, oil gaining more and more momentum, and you will find it becomes more tradable. So if you're really interested in position trade, you just take small positions in oil, gold, and wait, keep stop at entry and wait for the market to make the big rally after the election. So you will be able to really see very good fortune coming out of that. Any other question, please? Okay, when the questions are not coming forward, then I'll try to wind up the webinar. So they are expected to make the small slide hold low during that of the Japanese session. Afterwards, they are expected to gain the levels. Still use the hedge order to limit the risk. And also once the position makes profit, you keep stop at entry and continue the trade. So that is very essential for you to understand. Now these are all the levels in which they have just done the spread this week. And probably they can breach the high or the low a little bit in order to induce the long holders or the short sellers to come for the closing of the positions. Then afterwards, you find that they are just making an extended move on the downside by breaching the low in some pairs. So they are likely to gain the level slowly from that of the European session. So these are all the recommended trades. So I'll come back on Monday. Now, I take this opportunity to thank FX Trade for the facilities provided to present the webinar, and hope you are able to really understand and appreciate the efforts what I put in for you to gain market confidence, get rid of the market fear, so that you will be able to make decisive trades when you have the tools like the forecast as well as the trading strategy. Wish you all happy weekend. See you on Monday.